All right, let's go ahead and review Wednesday's session based on last night newsletter. We'll review the notes, see how that played out, and then we'll get into what we're looking at heading into Thursday. So taking a quick step back, okay? Picking up on Tuesday's move, okay? The markets was trading within this range right here that I'm about to highlight, okay, right here. Bah. And we're going to take this one out for right now. Okay, so, taking a little bit more, we'll open up that 1 hour time frame. Into Tuesday's session, the level of interest for the market to hold, after we picked up demand here, it sent the market skyrocketing. The first level of interest, and basically only level of interest for buyers to maintain control of the market short term, was set at 68.70. It's a previous pivot that we lost on Sunday's gap down. So, dipping under 68.70, as I mentioned, there was no reason to look for longs, and this set up a move back into our home base. All right, and now if we zoom in on our intraday time frame, the failure of 68.70, pushed the market into Tuesday's cash session, and put the market in an intraday range from 67.42 into the highs of 68.01. Okay, so the market's just boom, 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 ping-ponging within here. So nothing for us to do. Okay, and a little bit, almost an hour or so after Tuesday's cash opening bell, sellers attempted to break down this intraday time frame range, which was set at 67.42 into 68.01. Okay, sellers attempted to find continuation onto the downside by triggering a breakdown of this range. I was very clear on here that for longs to trigger, buyers need to reclaim back over 67.42, which essentially just puts the market back inside of this range. And getting back inside of this range is the main thing that exploits our entries. It signals a failed breakdown. Okay, so if you chase these type of moves, 9 out of 10 times you are going to be punished. So sellers attempted a breakdown, buyers reclaimed back over. This gave us a sign. This was a sign that the breakdown failed. Longs triggered at 67.42. And this set up the market to make a full round trip back into the upper part of this range right here. Buyers did not stop there, and buyers broke the market out of this range. Okay, that trigger is here in purple, 68.01. And that's where we left off into Tuesday. So into Tuesday, our first range of focus was set at 68.01, which was the most recent bullish 15-minute time frame pivot that was triggered. And the overhead pivot was obviously Tuesday's cash session high, which was 68.49, this box right here. Okay, so very straightforward into Tuesday. The outlook was set. Let me pull this up. The outlook was set if bulls can maintain this intraday breakout, meaning keep the market inside of this gray range right here and find continuation higher into Wednesday. All right, so as I said right here in yesterday's newsletter, was first intraday support is set at 68.01. I told you why it's our first intraday support. I already said why we wanted bulls to hold above 68.01. Okay, and this was our first level to look for participation. Okay, breaking under 68.01 and buyers can reclaim back over, I will consider longs, targeting back up 68.16, 68.49. Okay, just like how we did up here. It's the same setup. Break, recover, that's our long entry. We work by increments of about 10 points or so. The upper main target is always that 15-minute upper pivots. Right here was 68.01. Right here was 68.49. Okay, and as I mentioned, the market needs to break above 68.49 to set off a run. Up here, we knew that 68.49 was the trigger for continuation higher, and these were the targets listed here. We hit all three of the four given. And anything above 68.49 is all bonus. It's just extra icing on the cake. All right, so like I said, same setup as we saw Tuesday session. Same exact setup on Wednesday. Obviously a little bit different, but sellers attempted to break under 68.01. Okay, we saw some consolidation in the overnight session, and sellers failed to follow through on it. Okay, breaking under 68.01, we saw the market established, but sellers failed. Pushing back over 68.01, we established support. Longs worked at 68.01, and this set off a move, crossing off all the targets inside of this range and testing into 68.49. Okay, and into the cash open, we were stuck here at 68.49 for a little bit, got rejected. Buyers came right back up and triggered continuation higher above Tuesday's high. And, this gave us 68.70, 68.80, and I had 68.94 as the upper target as well. So 3 out of the 4 targets, 69.11, were given. So longs worked at 68.01. Longs also worked at 68.49. Okay, so good trading day. All right, so so what we're going to be going into in tonight's newsletter for Thursday session is that the market is back into an area once again where sellers have been present. Okay, and if you guys remember, last week, Thursday into Friday, on that specific newsletter, the market was holding within a range of 69.15 and to 68.70. Okay, last Friday's session, sellers attempted to break down. Of course, the market, moved back over, and Friday's session closed above. And into Sunday's open, the market gapped under 68.70, which set off a retest at the buy zone. All right, and retesting this buy zone, we picked up demand. This was our long area. It set up the market to move back over 68.70. And this was our level of focus into Tuesday, is we wanted to see bulls hold above 68.70. Of course, Monday evening, as I just went over earlier in this video, 68.70 failed. And this set off a sell right back into the buy zone. We picked up demand once again. Late Tuesday session, we found continuation on Wednesday session, putting us back into this previous 1 hour range, which is set from 68.70 into 69.15. Okay, so that's what we're going to be going over, and that's what we're looking at heading into Thursday. Is best case scenario is we can maintain above 68.70 And maintaining above 68.70, we want to look for continuation above Wednesday's high, which is 68.94. And this will set up a test at 69.11. Okay, 69.11 is our weekly high. Okay, and it is a much bigger breakout level. All right, so holding above 68.70, we're looking to put 69.11 into play. If the market can trigger strength over 69.11, we're looking to retest a breakdown level that we have not retested, and that is 69.41. And this is a previous 1 hour range up here that the market failed to establish last Thursday's session, which was February 26. Okay, so if we can maintain above 68.70, we're looking to attack Monday's high, which is our weekly high, 69.11. And if we can trigger above 69.11, we're looking to retest this bigger breakdown level. Okay, so we want to be, managing risk. And the first thing is that we don't want to be chasing. We don't want to be chasing at these breakdown levels, because this is an area where sellers were present. And it is possible that upon a retest, sellers may remain here. Okay, we had Tuesday session, we got started at 67.42. Wednesday session, we had participation for us at 68.01. We had a break above 68.49 to participate. All right, so heading into Thursday, the more that we inch close into 69.41, upside is being limited. Upside is getting limited. So that's something to keep in mind. Okay, into these bigger breakdown levels, I personally like to, start trimming long exposure if we have any. And if I'm considering trades up here, if we're looking to scalp 68.70, I'm keeping my trades smaller. I'm keeping my trades quicker because it's being limited up here. All right. The move started up here. We had participation up right here. As we inch closer, this is a level of interest for sellers. And if sellers do hit the market here, okay, now you're stuck at the altar holding a position, and we don't know how strong sellers are going to be in this area. Are they going to be stronger than these previous breakdown areas? That's something that we don't know until it happens, but that's why we manage risk. All right, but anyways, that's what I'm going to be going over tonight, just a little sneak peek. All right, for better understanding, and let's get into it.